So before we proceed to discuss amendments in other laws, we have last crucial session on income tax covering block assessment, appeals and capital gains. To guide us through the recent amendments, we are joined by Darshak Shah, partner at S&N Company. Mr. Shah is a chartered accountant and partner at S&N Company, leading the corporate tax advisory and business analytics practice. Having previously worked with KPMG and N.S. Shah Associates, offers extensive commercial and legal practice. His focus areas include corporate and HNI tax, litigation, international tax, capital gains, personal taxation, business automation, and analytics and estate planning, a recognized speaker and author on tax topics. Mr. Shah has guided over 100 SMEs in scaling to large-scale enterprises by leveraging businesses, analytics, and structured data. Welcome, sir. Over to you now.
Hi, how are you?
I'm good. How are you?
Absolutely fine.
Uh,
Yes. Shall I start the presentation?
yes, yes.
Okay. So very good evening to all of you. And uh, today the task which has been given by Taxmann to me is related to assessments and related topics to assessment. So what are we going to cover are basically the changes which has happened in block assessment. So that's one of the major change, or what the changes which has happened is only in relation to block assessment. So that's what we are going to discuss today. The second thing what we are going to discuss is about change which has happened in updated return. And the third thing what we are going to discuss is capital gain. Block assessment. So in block assessment, what one change which we have been able to notice is that previously this particular block assessment was supposed to be completed within 12 months from the end of the month in which the last authorization is made. So now what the change which they have done is that instead of completion from the month, it is from the quarter. So 12 months from the end of the quarter in which this particular uh, completion of block assessments is supposed to be made. The next thing which they have brought out is what is that? So they have this is something which is already there, where in case if suppose the time for the
Hello.
time, yes,
I'm so sorry to interrupt in between, but your screen is not shown, the PPT.
you're not able to see the screen.
No, your PPT is not visible.
Okay, just give me 1 second.
Okay. Now it is visible.
Okay, just give
Yeah,
me 1 second.
yeah, but it's gone again.
Okay.
Uh,
Hmm.
do we share the screen or you will share the screen?
I am trying to share the screen, but maybe I'll just start the presentation. I'll at least brief about what is the outcome, because what we are going to discuss about is on the amendments, and I will be able to share this even without the screen. However, my team is going to connect me on with the screen, so it may take 1 or 2 minutes, but till
Yeah,
that
yeah,
time we
perfect.
can at least go ahead with the presentation.
Yeah, yeah, sure.
Yes.
You want us
So,
to share the screen? We can do that also.
so even you can do it. Then I'm absolutely fine, ma'am.
Okay, okay. Just a second.
Yes.
Is it visible?
Yes, it is visible.
Okay, perfect.
Uh, yes. You just need to take me to the next slide, please, ma'am. Okay. So, it is visible. Okay. Thanks, Sanjeev. Sanjeev, thank you very much. So the first amendment which is there is in relation to the time limit. So as we are aware of, 12 months is the time limit within which the assessment needs to be completed, the block assessment. So they have said that 12 months, previously it was 12 months from the end of the month. Now they have extended it and they have said that 12 months will be from the end of the quarter. So once the search is getting completed, the last authorization has happened. From there, the quarter ending, and from there, 12 months is what the time which will be available. So just as an example, let's say the 1st January is the starting period and 31st January is a closing period. Then the quarter ending is March, and therefore the time limit which will be available will be March 26. Now here there will be one extension. So in case if supposed to hand over the documentations, etc., if they have taken time, if the investigation team have taken time in handing over the documentations, which is to the extent of, let's say, the 180 days, not exceeding 180 days, then that particular period will also be included and it will be extended. So there will be a 3 months extension which will be provided if suppose there is a delay in handover of the documentation to the assessment team. Can we go to the next slide, please, ma'am? Ma'am, can we go to the next slide, please? Uh,
Just a second, just a second.
yes, ma'am. Okay. From the computation perspective, so what is basically the change which has happened is that in case of disclosed, undisclosed income and normal income. So previously, if we see the computation, I'll just connect you to the next slide. So, ma'am, I would request you to go to the next slide of the presentation. Yes. So this is an important slide. Now, if you see what is the provision which was there and what is the amendment brought out over here. So previously, the provision was saying that if the total income is it is the returned income, it is an assessed income, or it is an income which is disclosed under 115, 158 BC. So that particular income will be considered any amount which is identified during the course of the search, that will be also included and that will be considered as undisclosed income, right? So the tax which is going to be calculated, if you see this particular example, the example is saying that 65 lakh was my returned income. my assessed income was increased by 5 lakhs. So 70 lakh is my uh, 70 lakhs is my assessed income. Now that 70 lakh, when I have filed my block return, so block return, I have increased it to 75 lakhs. So 75 lakhs is my total income. In that, what is my undisclosed income? So undisclosed income is 55 lakh. So how will that be calculated is that in the block return, I have filed 5 lakh rupees as an additional income, which is in my block return, uh, which is my block return, plus plus 55 lakh is the amount which I have not declared or I have not disclosed and which is found during the course of search. So 55 lakh plus 5 lakh, 60 lakhs will be my undisclosed income, and on that 60% will be my tax rate. So that is something which is already there in the last budget and the last law where this was provided for. On that, there will be a penalty. So penalty of 50% will be only on the undisclosed income. So the amount which I have already declared in my return under 158 BC, on that there will not be a penalty. The penalty will be on an amount which is not disclosed, which in this example we are able to see it is 55 lakh. So, as a sum, if we see this chart, it is saying my returned income will be a normal income, my assessed income will be a normal income, the income which I have disclosed in my return will be a part of my block return, so block income, and the income which I have not disclosed, but it is additionally there, that will be also a part of my block income. So this total will be considered as undisclosed income as a part of my block assessment. Now, what is it trying to then say? It is trying to say that what is the amendment? The amendment is trying to say that during the period when the search was going on, right? Let's say in this example, we are saying that income from April to June, because the search was initiated on 30th of June. So from 30th of June till the time the search has got completed, which is 30th of July. So here it is before the date when the return is supposed to be filed. So that particular period will be excluded. It will not be considered. Okay. One more thing, the amount financial year 24-25. So in this example, what we are saying is the search was executed on 30th of June 2025. Okay. The search was completed on 30th of July 2025. That is all before the due date of filing the return of income for financial year 24-25. Now, this particular, because it is before the end of the financial year, so 24-25, because there is a time available for me to file the return of income and I can disclose my income, therefore it will not be considered as a part of block income. It will be considered as normal income. That's number one. Number two is the period from 1st April till June is also not will be considered as a part of block income. That will also be considered as separate income, because it is for me it is possible for me to file the return of income and disclosed it. So this is the rationale because of which they have said that this will be considered as a part of normal income and normal provisions will apply. And the amount which is prior to that, and if that is something which is undisclosed, that will be considered as a part of block income. So this is one difference which has been brought out in current budget, which was not there in the last budget. Yes, can we go to the next slide please, ma'am? Yes. Now, what are the questions which may arise from this particular budget? So, what happens if the transfer pricing assessment for 2 years for the block period have already been closed? So, because the transfer pricing assessment has already been closed, and there is no new material being found, because if there is a new material being found or there is some material which was not there as a part of my assessment or my calculation of transfer pricing income, Anything new has been come out, then it is a different scenario which we will be discussing across. But let's say something which is not newly found or new, not unearthed. In that particular case, there cannot be any assessment in relation to that particular thing. What will happen if the transfer pricing assessment for the block period are still open in appeal? So even if it is open in appeal, the question is whether any materials have been come across during the course of search which is going to have an impact on my assessment, on my TP assessment or my block assessment. Both the principle remains same. So if that has an impact on my assessment, then of course that is available for doing an assessment. Now, what also has been provided under this particular budget is that transfer pricing will not be considered as a part of block assessment. It will be referred separately to the transfer pricing cell, and they will do the arm's length benchmarking exercise. So it will not be part of the block assessment, which otherwise was used to be till last time. But now it is clear that it will be considered separately, and the transfer pricing cell will consider it or do the benchmarking exercise. Now, this is in relation to materials which have been unearthed during the search. If the materials are not, any new materials have been identified, then of course the assessment which has already been closed will be considered as final. Will there be a separate transfer pricing audit for block period? And in is taxpayer required to submit a transfer pricing report? Answer is yes, it will have to do it. Because if the transfer pricing additional documentations have brought out certain new transactions which were not reported for, then of course there will be a benchmarking exercise which will be required to be done, and that will be considered for the transfer pricing assessment. Will the transfer pricing assessment be limited to transactions identified during the search, or will it include other transactions as well? So as we are aware of the reopening principle, the reopening principle functions on the basis that when the assessment has got reopened and the basis of the reopening is valid, then the matter is open and the assessing officer can look into various aspects of the assessment related to it. So the same principle will continue. So answer is yes. If the transfer pricing if the transfer pricing assessment has been opened from a perspective additionally, and it's a valid matter of verification or reopening, in that particular case, yes, the officer has the right to get into the transactions. The same older principle which was available or which has been followed over the years, the same principles will continue. Okay, the reopening principles. Now going to the next point, as per the proposed changes under 158 BB, income from international or specific transactions for the year in which the search is concluded shall be excluded from the block assessment due to complexity arising in arm's length calculation for the part period. So that will not be considered as a part of block assessment. That will be separately calculated, as I said, by the transfer pricing officer for doing a benchmarking exercise. Now we move to the next point. The next point is trying to say that in case of a block assessment, let's say there is one search which has got executed. Okay. And one the search has still not got, so the search has got completed, but the assessment of that search has not got completed. But because there was some other search at some other on some other person, because of which also there is another search which has got executed to the same assessee as a second search, and then there is an assessment. So this is the scenario which we are trying to cover over here. Principally it is just trying to say that if one search has got completed, now we are moving to the second search, then the assessment, though it is considered as pending, it is actually not only pending, it is required to be done. So there is no notice which is already issued and therefore it is pending. It is required to be done. And therefore the wordings which have got changed is that if the search is completed, assessment has not happened, and there is another search, so thus another search will be completed. and then there will be an assessment which will be getting executed. Since this states that the income will not be a part of block, which means that it will be calculated separately by the transfer pricing appraisal, what will be the tax rates and applicability? So that will be considered as a part of normal income, and the calculations will happen accordingly. So it will not be forming a part of block income. It will be considered as a separate income, and the tax calculation will happen as per the normal income tax rates, and penalties will be applied accordingly. So this is about the block assessments. Principally, what they are trying to say is that number one, any amount which is identified during the course of search for the years which is prior to the financial year for which the return is not filed. Okay, and the due date is still alive. So it is not that we have passed the due date of July or September. And if the search has got executed and any new materials have been found, in that particular case, the taxpayer has a power and has a right to disclose that particular income as normal income. However, for the previous years where the due dates have got completed, for that it will be considered as block income only, and it will be assessed as a block income, and the tax will be applied accordingly, which is 60%. Now, for the period where the due date has not expired, the due date for filing the return, it is expected that the taxpayer will include this particular income and include it in the return, and he will pay the appropriate taxes and interest on that. The second situation is where the due date has got expired, but the due date for last belated return filing is not expired. So it is 139(1) which has got expired, but belated return due date has not expired. In that case, what will happen? So the law is saying, and they are referring to section 139(1), which means the date which is July and September. So if before that, if the search has got executed, in that particular case, financial year, in our example, 24-25 financial year, you will be considered as normal income if whatever has been identified for that particular year. But if the due date has expired, let's say the search has got executed in the month of November or in the month of December, still you have the time to file your belated return, but that will not be considered, and it will be considered as undisclosed income or income of the block assessment. So that is the difference which we need to notice or keep in mind as far as the block assessment or the search provisions are concerned. Now let's move to the next point. Ma'am, can we go to the next point, please? Yes. Now we are going to updated return. So what is the there in the updated return is what we analyze. So now, as we are aware of, previously the updated returns were supposed to be 2 years, but within third and fourth year respectively. So previously, it was that you are supposed to file, you can file your updated return, and the updated return are in relation to where you want to increase your income, or when you want to reduce your losses, or when you want to which is resulting into reduce reduction of refunds. Okay, so which is in favor of paying higher taxes. Okay, those are the one which are eligible for updated return. Now what they are saying, to keep it simple, they are saying that for the financial year, let's say from any financial year, you have 5 years till which by which you are able to update your return. So year one, let's say if we take financial year 21, then 21, 22, 23, 24, 25. So these are the years in which you can file your updated return. So from the financial year, it is 5 years within which you can file your updated return. So keep it simple. Now, the tax rates which they have applied is different. So initially it is tax rate plus 25% penalty. Then it is 50% penalty. then it is 60% penalty, and then it is 70% penalty. So the proportion of penalty is increasing as and the way we move forward on the path of time limit. So 21, 22, 21, financial year 2021, if you are good getting it done in 22, then the penalty is 25. If you're doing it 23, the penalty is 50. If you're doing it in 24, the penalty is 60 and it is 70. So that's how your penalty will increase if you are filing your updated return later, right? So that's one thing what we need to keep in mind. But at least this window has got open, which is mainly for, let's say, if you have forgotten or if you have by mistake not considered an income, and if you want to go back and file your updated return, then this is the provision through which you can update your return, you can compliances and be out of the non-compliances provision. Nowadays, I'm noticing that there have been inquiries from a non-resident Indians who used to file their return in India, but and have executed certain transactions, but they have not filed their return, or where they have filed the return, but the returns have not been filed appropriately. Now, because non-residents are very clear and clean in compliances, so therefore they don't want to have any non-compliances, and therefore they come forward to disclose this income. Now, initially it was only 3 years for which you were able to do it, because now they have extended it, so the window has got open and now you are able to do for more number of years, and you can update the return. So that is what the provision is trying to say. Now there's one case scenario which we'll be discussing across. So let's say Mr. Raj has filed a return for 21-22 declaring 3 crore. However, in 2024, he realized that there is an underreported income of 1 crore, which was not disclosed in the original return. It was not disclosed. It has it had a misreported 50 lakhs by claiming inadmissible expenses. So these are the two situations. Now let's say what will happen and how to analyze what should be done in such scenarios. Let's go to the next slide, please, ma'am. Yes. So here, if we see what is going to happen is tax. If we see the tax on additional income of 1.5 crore is 45 lakhs. Penalty for unreported income is 50%. Penalty for misreported income is 200%. And 5 lakhs is the interest cost. The total tax outflow, if it is getting caught in the course of assessment, then it is 155 lakhs. Secondly, there is non-compliance also. So the other way of doing it is, if you go for an updated return, then you're paying 45 lakhs as tax amount, interest amount of 5 lakhs, and the total tax outflow will be additionally 60% of 45 plus 5 lakh of interest. So in total, and of that 60%, because you're filing it in fourth year, so 60%, and therefore 60 lakhs, 80 lakhs would be your tax outflow. So as an example, we are able to see that because of this provision, even if you want to, even if you want to uh, pay taxes, you are able to pay off the taxes by reducing your penalty component to the extent of 60%. Right? Move to the next slide, please, ma'am. Okay, there is one more slide related to capital gain. Yes. Can you please go to that slide, ma'am? Yes. So under this particular slide, what is the change? So we all are aware of that in case of insurance premium. So if your insurance premium was 2.5 lakh for a ULIP plan, or 5 lakh rupees for an insurance life insurance plan, then if it has been below that amount, then you are exempt from paying taxes when the money is received back. But what in a situation where it is an investment link fund, where you are able to earn higher, when you are able to earn higher by investing higher. So when you are investing as a premium of more than 2.5 lakh of rupees, that is eligible for exemption when you're getting the money back. Now there was a gray area in relation to whether this will be considered as income under other sources, or it will be considered as income under capital gain. So they have made it very clear that this particular transaction, where the amount invested as a premium is more than 2.5 lakh of rupees at one go, then when the money is received back, it will be considered as capital gain, because the transaction, the asset will be considered as capital asset. That's number one. Number two, it will be considered as equity oriented fund. So therefore, if you are holding it for a longer period, then in that, for which is more than 12 months, which of course generally has been the situation. So in that particular case, the tax rate would be 12.5%. If you are holding it from a short-term perspective, then in that case, the tax rate would be 20%. So because it's an equity-oriented classified asset, the tax benefit will be available, which is rationalized tax rate of 12.5% will be applicable in that situation. Also, one thing is that if, because this particular asset will be considered as equity oriented fund and capital gain, so if you have bought some property in relation to it, then even the benefit of 54F will be available to adjust the capital gain amount which is invested into the residential property. So that's something which we need to keep in mind in relation to the amendment related to the ULIP plans. Ma'am, can you go to the next slide, please? Yes, I think these are the elements which are introduced. There is not too many amendments which are there. There are no major other amendments which are related to assessments or appeals or capital gain, and therefore the limited amendments which has been brought up is something which I have got the privilege to share it with you. If you have any questions or any doubts, you can, of course, touch base to Taxman. You can even touch base to me on darshak@snco.in, where I will be happy to answer your queries. I will also be happy to answer the queries if it is coming out in the chat box currently. With this, I'll just hand over the floor back to ma'am.
Thank you so much. It's always a pleasure to have you. Thank you. Uh, Anybody, please drop your queries in the chat box.
Ma'am, since there are limited amendments, I don't see there are going to be any major queries coming.
Yes.
I think we need to have one more round of presentations once the uh, bill is introduced.
Yeah, yes,
The new
sure.
bill which he is referring to.
Yes. What are your thoughts on the new bill? How it will be?
I think my view is number. There are a couple of things which are there. One is uh, when we compare it with some developed countries. Okay, there are clarity. So one thing which I'm no, seeing is that there will be a clarity. Second, there will be provisions which are going to be related to uh, the inflow of funds. How do we attract more funds into India? So that is going to be the second thing which I think should be there. And third thing, it is the current law, the current bill, the current act. As we are seeing, it is complex. I see that there will be a lot of simplicity for us to analyze the law. So these are the three things which I'm anticipating from the bill.
Perfect. There are some couple of queries.
Yes.
Number one is ULIPs that do not qualify for exemption under Section 10, subsection 10D shall be included in the definition of an equity-oriented fund. Is this amendment applicable only for ULIPs to be taken on or after 1st April 2025? If yes, what will be the tax treatment for ULIPs purchased before that?
So this is basically more of a clarificatory nature. So even if something which is before this will also be considered, because what they have tried to classify is that all the ULIPs which will be classified as an equity oriented fund. So even the funds which are prior to this will also be considered as equity oriented funds.
Okay. Um, Another is the amendment to Section 115 UA regarding the taxation of long-term capital gain from listed shares is effective from assessment year 2026 and 7. However, the omission of reference to Section 112A under Section 115 UA was unintentional error. Do you think its amendment should be applied retrospectively?
Can you please repeat this question? Can I
Okay.
see this question which is there on the chat box?
Yes, I'm sharing it on the chat box.
Yes. Okay, no problem. You can repeat the question.
Just a second, just a second. I've shared it in the chat box.
The amendment is 15 UA regarding the taxation of long-term capital. No, I've lost it. Can you, ma'am, please speak about the question?
Okay,
Can you
I'm
narrate the
repeating.
question, please?
Sorry.
Can you please narrate the question?
Yeah, yeah, sure. Just a second. The amendment to Section 115 UA regarding the taxation of long-term capital gains from listed shares is effective from assessment year 2026 and 27. However, the omission to the reference Section 112A under Section 11 UA was an unintentional error. Do you think this amendment should be applied retrospectively?
Something which has got completed as an assessment year. I don't see that, okay, now you will be able to make it retrospectively, and that is not something which is the intention. So I believe that has to be applied prospectively. So whatever was taxed at 10% previously will continue. Now it will be 12.5% from the henceforth. So when the bill is getting passed from then onwards, it should be considered. So though it was unintentional, but something has got passed is passed.
Okay, continuing that question, what challenges might unit holders of business trust face due to prospective application?
So I think the prospective application, the trust will be formed, whatever capital gain which is now going to arise, because the business trust are a pass-through entity. So the provisions, the date from which the provisions are going to be applicable. Prior to that, if there is any capital gain, that will continue to be at 10%. And now onwards, whatever is going to be the now onwards, I mean to say from the effective date, whatever is going to be the capital gain, that will continue to be at 12.5%. So implication wise is going to be on the pass-through status to the unit holders, and that's how it is going to be applied.
Okay, there's some questions in the chat box. One is regarding Section 10, subsection 10D amendment. Is it applicable for all ULIPs issued earlier?
So I'll do one thing. I'll since the question has repeated back, and I believe it's from the same audience. I will do one thing. I'll have a cross check on this particular point, but that is my view. Yes.
Okay.
So what I would request to the viewer who has raised this question for the second time, if you can just put me an email at darshak@snco.in, I will give you a confirmation of that particular question.
So there's one more question that what we had paid would be considered capital receipt, and what more received will be considered as capital gain.
Okay, so answer is yes, and that's always been a situation that when you pay it, let's say even for other assets, when you pay it is a capital receipt, right? Because that's not a deductible expenditure at that point of time. It's always been a part of the balance sheet. So it's a capital asset answer, capital receipt, capital payment. It is right. When you are receiving it back, Okay, it is now qualified that it's not other income, it's a part of your uh, capital gain, and therefore whatever is paid is going to be getting deducted from this.
Okay, perfect. There are some more questions. Another is the block assessment provisions were recently revised in the current and previous year's budget. What simplification can we anticipate in block assessment under the upcoming new income tax?
I think one thing which I can notice is basically see, one thing which was anticipated is this particular thing, where currently what they have already brought in, which is in relation to income, which is not considered as a part of or something which is the due date for filing return has not got completed. So problem was that though my due date is pending, but I was still considered as a culprit and I was charged as a block income. Okay, and I had to pay higher tax. So they have made that claim very clear and they have brought it as a relief that that portion for which the due date for filing return is still there, that will be considered as normal income. So I think that is already brought in. So I don't see any new amendment to be and not anticipating that, because if that would have been there, it would have been covered into the block changes which they have brought out over here. Yeah, there can be a possibility of some simplifications which they may do so that you are able to interpret it well, you are able to make it simple to understand the law. That could be there, which is the overall objective. But specifically from the amendment perspective, it is something which is already included.
Okay. There's one more question. Under Section 158BB, if the due date for filing the return under Section 139 hasn't expired, does both the Sections 139 and Section 158BC returns to be filed for the income disclosed to be treated as disclosed, or is the income only under Section 158BC sufficient?
Okay, can you please repeat this?
Under Section 158BB, if the due date for filing the return under Section 139 hasn't expired, does both the Section 139 and Section 158BC returns need to be filed for the income disclosed to be treated as disclosed, or is the income only under Section 158BC sufficient?
So I think here for the period which is related to your normal income, you will be filing a normal return. For the period for the block income, you will be filing under 158 BC. So the income calculation will be different for two different returns, and that's how you will be filing it. Because the normal income, when it is considered as normal income, you will be filing your normal return, and that is what the objective is. That since you have the time limit to file your normal income, it will be considered as normal income, and you will be able to file your normal return under 139. For the block income, you will be filing under 158.
Okay,
So
perfect.
there will be two returns which will be getting filed, is what I'm saying.
Okay. Uh, I think that's all from our end. Thank you so much for
Most
such
welcome, ma'am.
in-depth analysis. Thank you so much.
Thank you, ma'am. Thank you very much. And always happy to share my views on Taxman. Thank you very much, ma'am.
It's always a pleasure to have you. Thank you.
How many sessions are left, ma'am?
Two sessions are left now.
Chalo, very good. Some more people to share their views.
Yeah.
Chalo, bye bye. Take care. Thank
Bye.
you very
Take
much.
care.
Thank you,
Thank you.
audience.